What's going on, guys? So I just want to give you an update. Technically, we already passed, I guess, the funded account. Not necessarily like for real, but like as I said, if you saw in my first video that this was a road to a funded account, we hit 14% already, and those were two lucky trades. And I say lucky because it's usually 30, 40% of the time that we get a winning trade, but I'll show you why the winning trades are way better than the losing trades, and it's all due to our risk management. So I didn't trade last week just simply because I was not in the proper state of mind. There's a lot of stuff going on out here in life. I still have my business that I have to run, and letting go of that to spend more time with my kid, and trying to transition and move and all that stuff. So I got a lot of stuff going on, but let me show you. This week we started off strong. Monday I took a trade, but it was on gold, and it was just like a 1 to 1.5, so it was just something in the morning. I wasn't in the best place either. So whenever you're not 100%, you don't trade. So I cut my win short, and it ended up reversing, so it's good that I cut it there. So I'll start with this one. I don't really want to count that one because I don't really even want to count it as a trade. So I'll start. Today's Tuesday, and let's see the trade that we took this morning. So coming into Euro USD, I did monitor AUD USD on gold as well as GJ, but GJ usually moves a lot at a London session, so I'm not really trading that anymore. So coming in, let's do the replay real quick. Coming in around 5 o'clock, right? What I was started to see is these higher time frame. Well, let's start from the higher time frame. So higher time frame, that candle's already there, so you can't really do the replay there. So let's go from the 4 hour. Okay. So from a 4 hour perspective, I saw this long wick to the bottom here, taking down this liquidity, but not running this liquidity, right? There's still a gap in price there, so ultimately the best target, the most high probability target would be around this area, but we respond to what the market gives us, not what we want it to do. Sometimes if it hits right there, I definitely take that trade. But coming down to, I saw this 2 hour order block, and I saw, okay, well, this 2 hour order block right here has enough to be able to hold price up, especially when you have some quasis coming down here. You have all these exhaustion wicks into these order blocks, taking liquidity from this order blocks in order to propel itself up, possibly taking up London previous high, Asian previous high, New York previous high. And this is why it's important to mark your session highs and lows, because you want to know where the banks are lining themselves up, because sometimes they set themselves up for each other, right? So what we did, we ran the previous low of Asia, and we ran New York previous high, and we set a new London previous low, right? So ultimately, this came in, actually London session came in, and this was a really good trade down here, because if you could have caught a reversal from this 2 hour right here, you could have written the market up and then possibly taken it up all the way to New York previous high, which is actually what happened. So coming back down, we see a lot of bullish order blocks, bullish, bearish, bullish. This one order block here, this one order block there. We have a lot of buy pressure right there. We have a lot of buy pressure as we come back down to retest this 2 hour order block here. However, we do have a lot of missing price to the front, to the bottom as well. So this is why you always line up two moves. So ultimately, I was going for longs because I also noticed that to our left, there was a lot of unmitigated price, especially in the 1 hour here. And then we don't really see a lot of exhaustions to the top. From the previous sessions, we don't really see a lot of exhaustions to the top. So if we really do want to come back down, I would want to at least run this liquidity. Now, if we bounce off this order block right here and it gives us a reversal, which this candle here kind of psyched us out, so this could have been a trade as well. Ultimately, it would have probably been like a 1 to 2, maybe 1 to 2. Yeah, no, it would have been like a 1 to 2. You wouldn't be able to hit that 1 to 3 because it was on the 1 hour order block, and you could have taken that trade right there. But that wasn't the most favorable trade ultimately. So this candle came in at 3 o'clock. This candle came in at 4. So we're waiting for the third one. Okay. So what are we gonna do? Are we gonna continue to the upside, or are we gonna break through the order block? So when I'm looking over here, there's gaps in price right there. Yeah, and then the smaller time frames, there's also gaps in price. So I'm thinking, okay, well, we have gaps in price and we have a higher time frame order block. This is the daily order block here. So usually price, what it wants to do is it wants to take some of that higher time frame liquidity before it comes back down. So that's one, I guess, bullish bias that I had this morning here. So we're coming down to the 15-minute, and this is where I took my trade here. So I'm monitoring the 15-minute. 5 o'clock opens with long wicks to the bottom. Okay, let's go down to the 5-minute. We have a liquidity trend line here forming. Okay, we have a channel forming here. That's not to say that I take these trades all the time. It's just more for confirmation. I don't really do trend line trades. It's just more for confirmation, to give myself a scope. But I do know what these are, and I do know what it is, though. This is a bullish flag here. So we also do have, let me see, we tap this hour 2 order block here, and then what's going on here? Okay, well, there's a first confirmation here. All right, 1, and this is a higher time frame quasi, and then the possible left head, right shoulder, possible left head, right shoulder. Okay, so I'm monitoring price. Okay, and here we go. We do get a break of this liquidity trend line. We do get a retest on this 5-minute bullish, bearish, bullish order block, and this could have been a trade here, but I kind of slept on it because I was still kind of psyching myself out. I was like, oh, I don't know about that. There's a lot of wicks going on. You know, this could have just been a run of liquidity before it goes down. But this is why you have to train your psychology. I'm trained. I've trained myself that whenever I see my entry parameters, I just take it no matter what. So I should have taken this trade, right? But I didn't. Especially since today was election, so it was a little questionable. But I said, okay, well, let me see if I can get another re-entry. Alrighty, so it came back down. Alright, see how it still stayed within this order block here? I said, okay, that's fine. So we got a retest of this order block. We got a retest of this trend line right here, right? Where we're in a good position to take price to the upside. So let's do another candle. Okay, so that's a strong candle. You could have also entered here, put your stop beneath this order block. It would have been, let's say, that's another entry. That could have been another entry. It's a little, not the best entry, but it's still pretty good. A 10 pip stop, 9 pip stop, 8. That's pretty good too. All right, so let's do this. All right, and then we came back up over here, doji, and I believe this is where I entered here. All right, yeah, I entered here. So I went to the 7-minute time frame. Okay, so this was a good bullish, bearish, bullish pattern here. So I just managed to get a 5 pip stop. After I saw this pattern here, I entered on the base of this bullish, bearish, bullish order block, and I put the stop underneath this wick. But generally I don't like to put my stop too small, because it does run, sometimes it does wick you out. and I want to have at least a 5 pip stop most of the time. Unless that order block looks pretty solid, then I'll get a little risky, or I'll cut my entry into two. So this is a 1%, this is a 1R right here, right? So I cut my entry into two, and I'll have a smaller stop on the next one. Obviously, it's high risk, you lose about the same, but on this particular one, I went with a 5 pip stop, and it was a good idea because it was kind of, when I entered, actually, I think I entered right here on the 1 minute, somewhere like that. Let me see exactly. Oh, tell you exactly where I entered. Okay. Okay. All right. Well, I took it up. Obviously, like the trade went in our favor. Um, but I believe it was here, bullish, bearish, bullish order block, and I do believe it was around here that I entered. Around, no, it wasn't there. It was right here, around right there. on this bullish, I monitored this bullish candle, and then this one right here, and I was like, oh man, here we go. But I already committed to it, and then thankfully it came back up. It didn't hit our stop, but this is why we don't close our targets early, guys. So before, when I first started trading, I would see price run up, and it will give me a 1 to 2, 1 to 2.5, and say, hey, that's a good day. That's a good day, 1 to 2.5. But what I didn't realize is that I was cutting my profits short. So therefore, my profit ratio, I was still losing, or I was a break-even trader, I was still losing. And once I started committing to hitting the full take profit, then I started becoming profitable, right? So my first target was the running of this liquidity. I was going to obviously, and it ran this liquidity up here, but this wasn't my major target because obviously that wouldn't have given me the 1 to 3. Okay, so I was monitoring what was happening over here, and then I saw this candle in the 5 minute. I was like, okay, well, this is a good sign for reversal. And I said, okay, well, it came back down for another grab at that liquidity, and then it exploded up, right? So thankfully everything worked out. The second target was up here, okay, and I monitored how price went. This candles like this will definitely psych you out, but it did hit my 1 to 3, okay. So I risked 1% of my account, and I made 1%, 3%, right? So if I would have lost, let's say $1,000 in a 100K account, I would have made $3,000 today, right? So that's why I'm trying to aim for that funded account. That's why I'm waking up every day at 4:30 in the morning, looking at the markets, making sure that I stretch, I exercise a little bit before I get on here. I drink a lot of water. I do what I gotta do. Listen to some trading music. I have like some classical stuff, whatever that I listen to, and make sure that I'm in the right state of mind. Now, my ultimate target was right here. I did take partials right here. I took about 80% of my trade, and I let 20% run, and it hit. I think I closed my trade up right here. Yeah, this was previously a previous Asian high. I did close my trade up here. I could have waited till right there, but hey, you know what? You gotta know when. Don't be greedy. You gotta know when. That's pretty good. So ultimately, it was on 1 to 3, a 1 to 5. 20%, 2 times 5. So it was around 4%. We made around 4% on our account today, guys. Right? So that's pretty cool. That was today's trade. It was a good setup. It was really choppy today, but it was a good setup. Ultimately, those are the setups that we pull the trigger on. I should have realistically, I should have caught this trade right here, and then maybe even had a little bit bigger stop. But if you had caught this trade right there, you could have put it under this order block, or if you wanted to, because there's some missing price right here. If you zoom in. Usually when I see missing price underneath an order block, I put the stop underneath that missing price, which is this right here. Right, kind of filled it in, but if you go into the 1 minute, there's missing price there. Ultimately, right there, could have got a 1 to 3 easy with a 10 pip stop, right? You got 29 pips, and it worked in your favor. Or you could have put the stop, and you could have got that. You could have caught even more. So let's say a 4 pip stop. That would have got you a 1 to 7 RR, right? If you would have committed to it, that is. So you, and then usually how I measure my trades, or how I trail my trades. I just use this that I learned from my mentor. Actively trailing your trades, right? So right here, okay, if I say, okay, well, I'm hoping that it's not going to, I see this bullish, bearish, bullish order block on the 5 minutes. It shouldn't close beneath that. If it does, then most likely I'm going to hit a break even. But luckily it didn't. Okay, and then after this one, after this one, I already knew, like that big bullish order block, I already knew, okay, well, it shouldn't go past this one. It shouldn't go past this bottom, because there is on a higher time frame bullish, bearish, bullish order block here. And if it does, then I'm just going to close the trade and take a break even for the day. So obviously another 5 minute candle comes. All right, cool. There's the next one. All right, cool. There's the next one right there. And I just I just follow the wick algorithm. You could have followed the wick algorithm. I didn't specifically because I wanted to go back to sleep, and I had got my 1 to 3 for the day, so that was enough for me. But technically you could have gotten it. I would have gotten it. I would have kept up with it up until, I'll tell you where I would have exited. Okay, so 2 candlestick pullback, all right. Bam, bam, 2 candlestick pullback, or 1 candlestick pullback, some consolidation on the lower time frames. Bullish, bearish, bullish. All right, cool. Everything's good. Everything's good. And this is where I would have exited here after the break of this order block right there. So if I would have decided to stay up and monitor this trade on the 5 minute time frame, we could have gotten up to a 1 to 19 if you would have taken that initial trade, which I should have, but I hesitated, so I waited for a re-entry, got my re-entry. But on the original trade, that's a 1 to 19. And you know what, guys? Stuff like this happens every day, which is why I don't trip. I take 2 trades a day. 2 trades a day. 1% each. So I'm willing to lose 2% a day of my account. Okay? So if all week, if Monday, Tuesday, and Wednesday, right? If Monday, Tuesday, and Wednesday, let's just make it easy and illustrate it here. Don't send me an email, guys. Alright, I promise I'll do better at explaining and stop lagging on these videos. So let's say I took, like for example, a couple weeks ago, I took 3 bad trades, right? So that's minus 3R, right? So minus 3R, and then I had 2 winning trades. So Monday was a bad trade, Tuesday was a bad trade, Wednesday was a bad trade, Thursday and Friday were good trades, and they both hit my 3R, okay, plus 6, okay, so I'm up 3. So I could have hit let's say a lot more than 3R, okay, and this was 2 weeks ago before I started doing these videos. So I think that one trade was a 1 to 11. Yeah, but I cut my profits at 1 to 3 because I was testing out a strategy, and I noticed that whenever I have a winning trade, it always hits 1 to 3. Always hits 1 to 3. it hits 1 to 4 and then 1 to 5. Okay, but not all the time. 1 to 3, 1 to 4. Most of the time, it hits 1 to 3, 1 to 4. A good amount of the time, it also hits a 1 to 5. But if it goes past 1 to 5, it's usually 1 to 10, 1 to 7, 1 to 12, something like that. But those don't happen all the time. I mean, obviously it happened today, but it doesn't happen all the time. So let's just pretend, okay, we're only going for 1 to 3s. That means that I could have had 3 bad days in a row and 2 good days in a row, and I'm still up 3,000 for that month on a 100K account, right? So I mean, for example, now taking it back to the previous videos where I had, I think I had minus 6R. I have a minus 6R, and then I got a plus 7, and then I got another plus 7, right? So I'm up 8% on the account. You see, 2 trades just took away all of my losses, just wiped away all my losses. And let's say once a month you catch one of these bad boys right here. This guy right here, a 1 to 19, this would have wiped out all of your losses for the month. All of your losses for the month. And whatever your wins were, there you go. Because I doubt it, even if you took even if you took let's say 5 times first one. Let's say you took 1 loss every day, right? Minus 20, because there's 20 trading days, right? Approximately. So you're down minus 20%, right? And let's say from those 20 losses, let's say 30% of those losses. So let's say 6 plus 6. Right? So damn, you're down 15%. Like, what are you doing? You really need to reevaluate your game plan here. But then you get one of these trades, like a 1 to 20 plus 19. Bam, you're still up 5% on the account. I mean, if you're taking that many losses, you should probably reevaluate your trading strategy. Obviously, do a little more back testing, do a little more forward testing, but you see the power here. You see the power of trading in the smaller time frames. You get much bigger runs, right? Because ultimately this in the 1 hour is one big run. And this in a 1 hour would have only been, let's say if I was trading the hourly chart, I would have based myself off of this order block right here. Actually, this wouldn't have been that bad, right? Right here, and I would have still caught a 1 to 4, right? We still would have caught a 1 to 3 right there. Bam. See that? We still would have caught a 1 to 3, and if we wanted to ride that to liquidity, right there, it would have been a 1 to 6. So it's not the most cases. Usually the order blocks, they look like this right here, so they're a little bit thicker, and the pip stops are like, this is a 15 pip stop right here, right? Yeah, see, even with a 15 pit stop, you would have still been able to catch 1 to 6. Anyway, guys, that's enough for today. I don't want to over-explain and do all that stuff. Oh, yeah, so I'm into crypto too. And I got this Dynaset here. Oh, guys, I should probably make a video about this. This is nuts, guys. This is AI and real traders crypto portfolio management. And it's the beta, right? And this is crazy because the guy who made this, the guy who's doing this team, who launched this team, is the grandfather of AI, Ben Gortzel. Oh man, just gave me an idea to make a video. And you know what? I should make a video. I just gotta put down all the information and stuff like that. But yeah. Anyway. There was news today, elections and stuff, whatever. But, let's see. Yeah, there was AUD news. That's why I didn't trade AUD today. Plus, it didn't have a really good setup today. So, USD elections, yeah. So, yeah, okay. Anyway, that's enough for today, guys. Have a good one. I'll see you on the next one.